Welcome to my channel. Once you sign a purchase agreement on your new home, there are still several steps to complete before you can finalize, or close, the transaction. While the process differs in each state, here are the basics of what you can expect during the period between signing and closing. After signing a purchase agreement. Once you have signed a purchase agreement, you will enter escrow, an arrangement that protects both buyers and sellers during real estate transactions. Escrow means that a third party controls payments between you and the seller in a separate account and will only release the funds once both you and the seller meet the terms of your agreement. An agent who is a realtor can help you navigate this process. An escrow account. Typically, a buyer puts money into the account to show they intend to close on the home, called earnest money. This may be a percentage of your purchase price or a set amount. The seller's property documents will also be held in escrow by a designated person, such as an attorney or another agent. Once you close on the home, your money will typically be applied towards your down payment and other closing costs. Things need to do before you can close. If you are paying for your home over time, you will first and foremost need an approved mortgage loan before closing. Mortgage lenders typically require certain tasks be completed before close, such as a home appraisal and a title search which verifies the seller owns the home. Lenders may also require that you purchase homeowners or other types of insurance. Homeowners insurance is important because it will cover you for unexpected losses at your home, which can help you repair or rebuild after damage, replace your belongings, and/or cover medical expenses if someone is injured on your property. You may also want to consider other types of insurance such as mortgage, flood, or title insurance, depending on your circumstances. If your down payment is less than 20%, you may be required to have mortgage insurance as well. Final walkthrough. Conduct a final walkthrough to inspect the property, ensuring it's in the agreed-upon condition. This includes checking that all requested repairs are completed, appliances and systems are functional, and there are no new issues such as leaks or damages. The walkthrough typically happens within 24 hours before closing. Any discrepancies should be addressed with the seller immediately to avoid delays at closing. Review closing disclosure. Carefully examine the closing disclosure which you receive 3 days before closing. This document outlines your loan terms, monthly payments, and closing costs. Compare it to your initial loan estimate to spot any discrepancies. Confirm that the interest rate, loan terms, and any fees match what you agreed upon. If there are significant changes or errors, contact your lender to resolve them before the closing date. Understand title insurance. Title insurance protects you against potential legal claims on the property. A lender's policy is typically required, but consider an owner's policy for added protection. This insurance ensures that you won't face financial loss due to unknown title defects, liens, or disputes over property ownership. Reviewing the title report with a real estate attorney can help you understand any issues that need to be resolved. Budget for closing costs. Be prepared to pay closing costs, which can range from 2% to 5% of the property price. These costs may include appraisal fees, inspection fees, attorney fees, and lender charges. Review the closing disclosure to understand all costs involved. Having funds ready, either in a cashier's check or wired to the closing agent, ensures a smooth transaction. Mortgage details. Confirm the details of your mortgage, including the interest rate, monthly payment, and loan terms. Understand the implications of fixed or adjustable rates, and be aware of any prepayment penalties. Make sure you are clear on your payment start date and how to set up your payment method. This is crucial for managing your finances and avoiding missed payments. Homeowners insurance. Obtain homeowners insurance and provide proof of coverage to your lender before closing. This insurance protects against damage to the property and liability for accidents. It's essential to compare policies for the best coverage and rates. Discuss with your insurance agent the specifics of your policy, such as coverage limits, deductibles, and whether flood or earthquake insurance is needed based on your location. Contingencies and documentation. Ensure all contingencies in the purchase agreement are satisfied. These might include inspections, appraisals, and financing approvals. Have all required documents ready for closing, such as identification, proof of insurance, and any documents requested by your lender or closing agent. Keeping an organized file will help the closing process go smoothly. These detailed points should help you navigate the closing process with confidence. If you have any questions or need further clarification, feel free to ask.